Nathan Wilson here with GuideSpring Wealth Strategies, investment advisor and certified tax specialist. Today's topic is why it's important to work with a certified tax specialist. The biggest reason is taxes are just another form of fees. Too often the conversation around investments come down to, well, what does this investment charge, or what does this financial advisor charge? But the mathematical fact is whatever those answers to those fee questions are in investments, they pale in comparison to the cost of taxes. And not all investments are taxed the same. For instance, let's say you owned a bond that is paying a 5% interest payment. Interest comes in at one of the higher taxations on the tax return. To contrast that, let's say you own a stock that's paying a 5% qualified dividend. A qualified dividend, as opposed to interest, could pay half of the taxes or no taxes at all on that income, depending on that particular person's other investment and income scenario. It's a big difference between what you make and what you keep with those two examples. To give you another one, the IRA, individual retirement account, and all the cousin tax codes like 401ks and such like that are all come in on the tax return again at the top end of the tax bracket. But it doesn't stop there. Not only is it taxable, but then it turns around and can create taxes on your Social Security, thus being a double tax in an IRA. And this is naturally concerning as an investment advisor when we're trying to plan for what income the client needs in retirement, because that income is dependent upon what they get to keep after the taxes are paid. And still, there's another example I'll give you, and it's what I call triple tax protected. There's a couple of different types of investments in these two tax codes that are protected from any capital gains, meaning any growth in the account does not hit your tax return. They're also protected from income, meaning any income you take out for whatever reason, whether it's before or after retirement, is not subject to state or federal income tax, and therefore also doesn't create taxes on your Social Security. And the third tax that they're protected from is when you leave that money behind to the next generation, they do not inherit an unpaid tax bill. So naturally, that's kind of the sweet spot of combining the investment world with the tax planning world. If you have any questions or would like to have a review of your investments and how they reflect on your tax return, or you would like to consult with us on a tax strategy on how to reduce or eliminate your taxes in retirement altogether, we'd love to schedule a chat. Use the schedule a consultation button below.